Good morning, students. Today we are going to solve an example on the basis of adjustments that we have done in the previous lecture. So these are the adjustments that we have discussed yesterday. First is outstanding expenses, second is prepaid expenses, third is accrued income, and fourth is unearned income or income received in advance, that is the liability of the business. So today we are going to solve a practical example. That first we read the question, that prepare an accounting equation on the basis of these transactions. The first transaction is Ram started business with cash rupees 25,000 and check of rupees 25,000 to open a bank account. Second, rent received in advance rupees 1,000, insurance premium paid in advance rupees 1,500, purchased goods for cash rupees 10,000, received interest from bank rupees 100, accrued interest rupees 1,000, rent paid rupees 500 and rent outstanding rupees 400. Purchased goods from Mahesh on credit rupees 2,000. Next, ninth is sold goods costing rupees 5,000 at a profit of 20%. And last is withdrew cash for personal use from bank rupees 1,000. So these are the 10 adjustments that Ram has done. Okay, now we will start question. Here is the format of accounting equation, and I have written these assets on the basis of the adjustments on the basis of transactions. First is cash, bank, stock, prepaid expenses. Prepaid expenses are our asset. Accrued interest means accrued income is also an asset for the business, and liabilities plus capitals are means capital plus creditors. Creditors is our liability. Outstanding rent means outstanding expenses is also a liability for the business, and income received in advance, which we have not earned but received in advance, that is the liability of the business. So these are the assets and liabilities. First transaction is Ram has started business with the cash and he had brought a check also, that is of rupees 25,000 to open a bank account. So the effect of transaction is cash will increase by rupees 25,000, bank also with the 25,000, stock no change, prepaid expenses no change, accrued interest 0, and capital will be rupees 50,000 plus that is 25,000 in cash and 25,000 a check. Creditors 0, outstanding rent 0, and income received in advance is also 0. Second transaction is rent received in advance. In advance means we have received an income in advance, that is it is a liability of the business, and first effect is we have received it, so the cash of the business will increase by rupees 1,000, bank no change, stock no change, prepaid expenses and accrued interest has no change, and capital will also be on 0. It means capital has no change, creditors no change, outstanding rent no change, and income received in advance means we have received rent as an income in advance, so it is a liability of the business, that is for rupees 1,000. Okay, after two transaction, students note properly, you are not doing questions as I have explained you, so follow the method and do carefully. After two transaction, we will make new equation by drawing a proper line before new equation. Cash is rupees 25,000 plus 1,000, that is rupees 26,000. Bank rupees 25,000. Stock 0, as we have not purchased stock yet. Prepaid expenses 0, accrued interest 0, and capital is rupees 50,000. Creditors no, and income received in advance is also rupees 1,000, and the total of capital plus liabilities is 51,000, and assets, that is 26 plus 25,000, also 51,000. Two sides are equal. Now next transaction, that is third transaction. Insurance premium paid in advance, rupees 1,500. Insurance premium being an expense, we have paid it in advance, means it is a prepaid expenses, and prepaid expenses are the assets of the business. And second effect, that we have paid it in the cash, so cash will decrease by the same amount. First we will write particulars, that insurance premium paid in advance, that is rupees 1,500. So cash will decrease by rupees 1,500. Bank no change, stock no change, no change. Capital, prepaid, sorry, I forgot to write prepaid expenses. Prepaid expenses, you can also write the name of the expense here, that is prepaid expense is only one in this question, so we can also write prepaid expenses mean prepaid insurance premium also. Okay, and if you have written prepaid expenses, then no, it doesn't matter. Prepaid expenses means the asset of the business, that is prepaid expenses, will increase by 1,500. So the effect of prepaid expenses is that one asset decreases but other asset will increases, and liability sides and capital side no effect, means they will not change. You must draw a line with the help of pencil. That is cash is decreases by rupees 1,500, so the cash will $24,500, bank 25,000, stock no change, prepaid expenses 1,500, accrued interest no change, capital will of rupees 50,000, creditors no change, and 51,000 liability plus capital, and 24,500 plus 1,500, that is 2,600, plus 25,000, that is 51,000. Sides are equal. Number 4 transaction is purchased goods for cash rupees 10,000. So we have purchased stock for the business in cash. Purchased goods for cash, that is rupees 10,000. So cash of the business will decreases by rupees 10,000. Bank no change, stock will increase by 10,000, and thus capital side has, capital and liability side has no effect. cash will 14,500, bank 25,000, stock 10,000, prepaid expenses 1,500, accrued interest 0, capital 50,000, total is equal 14,500 plus 10,000, that is 24,000 plus 26,000. 14,500 plus 1,500, that is 14,500 plus 10,000 is equal to 24,000. Stock is bank is 25,000 and prepaid expenses are 1,500, that both sides are equal, 51,000. Move to the next transaction, that is number 5th, received interest from bank rupees 100. We have received an income from the bank, received interest from bank, that is rupees 100. So we have not received it in the cash form, we received it from the bank, so our asset, that is bank, will increase by 100, cash will not increase. We have asset, that is bank, so we will increase the bank by rupees 100. Stock and prepaid expenses has no effect. And if we have received an income, then our profit of the business will increases. So whenever the profit of the business will increases, the capital will also increases. So you can check the total of both sides, that capital is also increases by rupees 100 and here asset side also increases by rupees 100, that is bank of asset of the business. Next transaction, that is number 6 transaction, accrued interest rupees 1,000. Accrued interest is an asset for the business, so asset will increase by rupees 1,000. Accrued interest, cash has no effect, bank no, stock no change, prepaid expenses no change, and accrued interest, that is our asset, increases by rupees 1,000. And also capital of the business will also increases because it is an income and it will increase the profit of the business, and whenever profit of the business increases, capital also increases. Next transaction, that is number 7. Rent paid rupees 500 and rent outstanding rupees 400. Rent paid means we have paid the rent, that is rupees 500. So cash will decreases by rupees 500, and also capital of the business will decreases by the rupees 500. That is, it is an expense for the business. So capital will also decreases. And rent outstanding means, outstanding, it word means rent outstanding is the liability of the business. So outstanding rent will liability of the asset will increase by rupees 400, and also it will subtract from the capital, that we will deduct the amount of outstanding rent from the capital, because it will reduce profit for the current accounting period. मीन्स अगर हम रेंट आउटस्टैंडिंग को कैपिटल में से माइनस करेंगे तो इट जो एक्सपेंस क्यों माइनस करेंगे, क्योंकि रेंट आउटस्टैंडिंग जो है, रेंट क्या है हमारे बिजनेस के लिए एक्सपेंस है, एंड इससे इसके कारण हमारा जो करंट ईयर का प्रॉफिट है वो डिक्रीज होगा. ठीक है, तो सो अब कैपिटल विल डिक्रीजेस बाय अमाउंट ऑफ आउटस्टैंडिंग रेंट, and also the liability for the business arises. Number 7. Rent paid and rent outstanding. That is, we have paid rent rupees 500. So cash will decreases by the amount of expense that we have paid, not outstanding. That is rupees 500 only. And bank no change, stock no change, prepaid expenses no change, accrued interest no change, and capital will decrease by the amount of expense that we have paid and by the amount of outstanding rent that we have not paid yet. So I am doing the total, I am writing total of two amounts, that is 500 plus 400. You can also subtract like this, rupees 500 minus rupees 400. So automatic the effect will be that rupees 900 will be deducted from the capital. So I have done two ways. Okay, you can also write, you also deduct 500 separately, 400 separately, but can also be deduct by rupees 900 collectively. Outstanding rent, that is rupees 400, the liability of the business will arises. Cash will rupees 14,000, bank of 25,100, stock 10,000 rupees, prepaid expenses rupees 1,500, accrued interest rupees 1,000, capital will decrease by rupees 900. We can do it roughly, that is 51,100 minus 900. That is 50,200. Next transaction, that is number 8 transaction. purchased goods from Mahesh on credit rupees 2000. We have purchased stock but on credit, so it will arise our creditor for the business. Purchased goods on credit, that is rupees 2000. We have not paid cash. Stock will increase by 2000. And our creditor will increases by rupees 2000. When asset increases, corresponding increases in liability. New equation will be $14,000 cash, 5,100 bank, 10 plus 2, that is 12,000 stock, 1,500 prepaid expenses plus accrued interest 1,000, capital rupees 50,200, creditors 2,000. Okay, next, that is ninth transaction is sold goods costing 5,000 at a profit of 20%. Now this is the new point when a percentage of profit is given, that is 20% on cost. Sold goods costing. Goods costing means goods have cost is rupees 5,000. Cost is 5,000 and we have sold it at a profit of 20%. So we will calculate 20% of cost first, that is 5,000 plus 20% means 5,000. Cost is 5,000 and we will calculate the selling value of this stock, selling price. 5,000 into 20%, that is 10, that is rupees 1,000. So 5,000 cost plus 20% profit, that is rupees 1,000, means selling price of the stock will be 5,000 plus 1,000, that is 6,000 rupees, and our cost is rupees 5,000 and selling price is rupees 6,000. So we have made a profit on sales and it is of rupees 1,000. 1,000 profit of the business will be added in the capital. First we will write particular sold goods. We have sold goods at a profit. There is sold goods costing 5,000 at a profit of 20%. Nothing is written here that we have made sales on cash or on credit. So whenever there is no word that is goods sold, there will be given name of debtor. So we will consider sales on cash also. Sold goods on profit. Cash will increase by the amount of selling price, that is 6,000 rupees. Cash is increases by rupees 6,000. Bank no change. Stock will decrease by the cost price, that is rupees 5,000. prepaid expenses no change, and capital will increase by the amount of profit, that is rupees 1000. We will put a sign of plus also, that it indicates that capital is increases, plus 0 0 0. We will make a new equation. Cash is rupees 20,000, 25,000, 1,000, 25,100. Bank stock will decrease by cost, that is rupees 5,000, 12,000 minus 5,000, 7,000. Capital will increase by rupees 1,000, creditors 2,000, outstanding rent 400 plus income received in advance rupees 1,000. We will write first balances on the new page, that is first is cash, that is rupees 20,000 plus bank is rupees 25,100, stock 7,000 plus prepaid expenses 1,500 plus accrued interest is rupees 1,000, and capital 51,200 plus 2,000 creditors plus 400 outstanding rent plus 1,000 income received in advance. Now we will do last transaction, that is number 10. Number 10 transaction is withdrew cash for personal use from bank rupees 1,000. So now we have the owner, that is Ram, has withdrawn rupees 1,000, that is 1,000 for his personal use from the bank. So bank will decrease, not the cash. Withdrew cash for personal use. If bank is not given, then we will reduce this amount from the cash. Now cash has no change. Bank will decrease by rupees 1,000. This is cash, this is bank, this is stock, this is prepaid expenses, accrued interest. Stock no change, but capital of the business will decrease. Whenever proprietor withdrawn cash from the business, the capital of the owner will decreases. 2,000 are creditors, 400 outstanding rent, and income received in advance. So capital will decrease by rupees 1,000. One asset decreases corresponding to a decrease in the liability also. So our last new equation is 20,000 cash of the business, 25,000 plus sorry I have wrongly I have put a sign of addition. Bank will decrease by rupees 1,000, that is rupees 24,100. Stock 7,000, prepaid expenses 1500, accrued interest rupees 1000, capital will decrease by rupees 1000, that is rupees 50,200, creditors 2000. Now we will do total of both sides. First we will add the amounts of assets. 20,000 cash, 24,100 bank, 7,000 stock, and 1500 prepaid expenses, 1000 accrued interest. $53,600. And as liability side, so the total of two sides are equal, means balance sheet equation and as accounting equation are equal, that is 53,600, 53,600. Assets are equal to capital plus liabilities. This is the accounting equation, and also assets are equals to liability because capital is also a liability for the business. So that's all. I hope you will understand. Thank you.